Be real. There's tons of bad advice floating around out there. As a loan officer who's helped hundreds of buyers just like you, I'm here to set the record straight. So grab a coffee, or maybe a mojito if you're feeling that Florida vibe, and let's debunk these myths one by one. Hey there, future Florida homeowners. I'm Scott King from Mortgage Matters, your go-to channel for everything you need to know about buying a home in the Sunshine State. Today we're busting some of the biggest mortgage myths out there that could cost you thousands or even your dream home. Stick around because this could save you big time before you sign that dotted line. And hey, if you find this info helpful, hit that like button and that subscribe so we don't miss out on more tips like this. You can also find all my contact info in the description below. Let's get started. Myth number one. First up, the biggest myth I hear all the time. You need 20% down to buy a home. Nope, not true. Sure, 20% avoids PMI. That's private mortgage insurance, but in Florida, you've got options. FHA loans, just 3.5% down. VA loans for our veterans, 0 down. And don't sleep on Florida's first-time buyer programs like Florida Assist, up to $10,000 deferred second loan with no interest payments. For a $300,000 loan, that's $10,500 down versus $60,000 with 20% down. Which sounds better to you? Myth number two, your credit score has to be perfect to get a mortgage. You need a perfect credit score to get approved. False. Yes, a higher score, just like 740, gets you the best rates, but don't need to be perfect. FHA loans in Florida can work with scores as low as 500. Even conventional loans start at 620. Here's the deal. I've helped folks with 600 scores buy homes in Miami and Orlando by fixing small credit hiccups. It's about strategy, not perfection. Myth number three, pre-approval isn't that important. Here's one that drives me crazy. Pre-approvals don't matter. Oh, it matters, especially in Florida's hot markets. Picture this, you find your dream home in Miami, but someone else swoops in with a pre-approval letter and boom, they win. Sellers here love buyers who are serious, and pre-approvals show you mean business. Plus, you're able to lock your rate in for 90 days. Huge with rates bouncing around 6.5%, 7% right now. Myth number four, adjustable rate mortgages are always a bad idea. Okay, myth four. Adjustable rate mortgages, or ARMs, are always risky. Not necessarily. ARMs start with lower rates, like 6% versus 6.7% on a 30-year fixed. For a $350,000 loan, that's $150 less per month to start. If you're planning to sell or refinance in 5 to 7 years, like a lot of folks moving to Florida, an ARM could save you money. Just know the risk if rates climb later. And myth number five, you shouldn't shop around for lenders. Last one. This is the last one. This is a costly mistake. All lenders are the same, so don't shop around. Wrong. Quarter-point difference like 6.5% versus 6.75 on a $300,000 loan saves you $45 a month or $16,000 over the 30-year lifetime period. I've seen Florida buyers save thousands just by comparing offers. As your loan officer, I'll fight for the best deal, but always double check your options. There you have it, 5 Florida mortgage myths debunked. Now you're armed with the truth to buy smarter and save bigger. If you like this video, please smash that like button and subscribe to Mortgage Matters for more insider tips every week. Want to personalize help? All of my contact info is in the description below. I'm Scott King, your Florida mortgage expert, and I'd love to guide you to your dream home. Drop a comment. Which myth surprised you the most? Let's talk. See you on the next one.